Hey guys, it's that dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value. Of course, the value by the metrics, the buying power, the individual stocks, and how they are performing. See if there are any deals within the portfolio, see what stocks are overvalued, but hopefully we'll have a couple deals in there, as well as my watch list and what prices I would be buying those stocks at an ideal buying price. So, jumping right in for today, we're about break even for the week. We are up $386. That 1 month mark, we are up $1,700 with a 3.2% return. Then that 3 month mark, we're up $6,600, a 13.5% return. Year to date, we're up nearly $6,000 with a near 12% return. Then that 1 year mark, we're up $11,600, a 26.7% return. Then all time since April of 2018, we are up $29,221.95 with a total return of 111.85%. So doing really well here, guys. Of course, market fluctuation is going to happen, but as long as you own quality companies and you take advantage when prices drop, you will make good returns over the long term. As of right now, our buying power is sitting at $4.12. That is because I did get dividends from Realty Income. Plus, I had a little bit of cash as well. I believe Google paid us as well. So, as of right now, guys, I don't have a lot of extra cash because I already transferred money over for this month and I did buy a share of Apple. So I'm glad about that, but I just wish I had a little bit more cash sitting on the sidelines so I could take advantage of any deals that are within the portfolio. So jumping in for today, let's take a look at the monthly dividend paying company, Dividend Aristocrat as well. Realty Income sitting at $56.55. We have 5 shares, around $280 of market value. Average cost is right around $52 per share. 0.5% of the portfolio is in Realty Income. Today we're down $2, down 0.72%. Total we're up $24 with a about 9.3% return. Guys, I did sell out of this company, but I do believe in it long term. It is not my main goal for this year, but I do want that monthly income. I think of them as a bond or as my social security, essentially. This is the company that I think is going to do well over time. I believe in real estate long term. They do have a great diversification within their portfolio of properties, and I do think over the long term, with the way that they have their real estate set up, that they will be making greater and greater amounts of cash flow through rent, and then, of course, paying me a bigger and bigger dividend. Now, this is not a high dividend growth company. That is not the goal here. I just want a steady growing dividend income that is consistent. It doesn't have to grow that much. It just has to remain steady. So that's my goal for Realty Income, is simply to replace my monthly paychecks. And I have other companies like Google, Visa, Apple, etc. that are higher growth companies that I think will grow the dividend more aggressively in the future. But Realty Income is just a steady Eddie, pay me every single month, right? It's just here to continuously produce cash flow that I may one day be able to replace my income with. That's the whole goal of the entire portfolio. But I feel like with Realty Income, it is more of the long-term goal. It's not a huge growth prospect within the portfolio. Next up, we've got Altria Dividend King, which means that it's paid for over 50 years continuously and grown the dividend every single year, sitting at $58.05. We have 320 shares, around $18,500 of market value. Average cost is $47.27. About 33.5% of the portfolio is in Altria. Today, we're down $92. Total, we're up almost $3,500. Guys, this is a stock that is traded sideways for quite some time, and I'm surprised to see it at such a high gain, but near $3,500 in the green is awesome. I'm never going to complain about a $3,500 gain, right? But the main goal for this specific position in the portfolio is to just keep adding to my Apple position. Now, as of right now, Apple is below the $320 that I make for every single quarter owning the stock, which I will be making again in April because it pays $147.10. So as of right now, Apple pays me, Altria pays me enough to buy a share of Apple plus some. So as of right now, it is fulfilling the goal. And if Apple ever gets above that $300+ range, I will just simply either add to Realty Income to boost every single month, or I will add to Altria to continue that goal. So as of right now, it's doing what it's supposed to do. The dividend is still growing. They are technically the owner of Marlboro cigarettes, so they have essentially the Coca-Cola, the market share leader of the cigarette industry. So I know smoking rates are going down, but I'm not worried about it because they have pricing power, they have brand loyalty. So unless something dramatic changes, or maybe people quit smoking more aggressively, something like that, then I'll worry about it. But as of right now, the pricing power that they have is able to outpace the amount of people that are falling off from smoking. So I'm not worried about it long term. People have a lot of negative to say about this industry. It's same thing like with oil. But I want to take advantage of those people who are naysayers and don't believe in it long term. I smoked for longer than I should have. So this is my way of getting money out of something that I put my money into, right? So smoking is going to technically fund my tech stock buying from here on out. So Altria does its job and does it well, has a little bit of extra cash flow. So even though it buys Apple, I could still buy, a share of itself, a couple shares of itself, or even Realty Income every quarter. So which you guys will see that live within the next, month and a half. Next up, we've got Coca-Cola, a little bit below $70 here. 15 shares of this Dividend King, and one of my personal favorite brands in the entire world. It is going to be a top 5 foundational stock, even though it doesn't grow as aggressively as some of the other options in the portfolio. For this set of months, it is going to be the one that I prefer to buy, simply because I love the brand so much. So market value is sitting at a little bit above $1,000. Average cost is $60.54. 1.8, almost 1.9% of the portfolio is in Coca-Cola. Today, we're down $1.20. Total, we're up $131. Near 14.5% return here in the green. Coca-Cola is paying us in April. It pays 147.10, so it's a little bit different. 147.12. So it's a little bit different than the normal 147.10 for this quarter, essentially. So Coca-Cola is paying us $7.65. That did just get a dividend increase as well. So Coca-Cola is not the biggest payer. It's not going to be the best grower over time, and I understand that. It is a very mature business, but I want to own it for the brand and the loyalty I have to that brand. So, high growth is not really my big issue here. It's not my big goal with Coca-Cola. Next up, we got Apple at $216.11. We have 11 shares, so I did buy one for this month. I said that earlier. But market value is right around $3,400 per share. Market value is at $2,400. Jeez. But average cost is right around $220 per share. 4.3% of the portfolio is in Apple. Today, we are up $37. Total, we're down 24 with a 1% loss. So this is still a small buy opportunity for Apple stock within the portfolio. I would take advantage of it, but I do think Google or maybe even Visa at this point might be a better buy than Apple. But I am still sticking to my strategy, and I want to have at least 20 shares by the end of this year. Next up, we got AbbVie, down a little bit today, but still way above my average cost at $212.25. We have 95 shares, $20K worth of market value. Average cost is around $95 per share. 37% of the portfolio is in AbbVie. I just rounded up. But today, we are down $150. Total, we're up $11K with a near 123% return. So guys, this is by far the best investment that I have in the entire portfolio, and I plan on just letting this grow. As of right now, it's really close to buying me a share of Google, especially at the deflated price. I think it's like $155 as my dividend for every quarter with AbbVie. So with a little bit of extra cash, maybe, eventually the Realty Income dividend can get back up there to around that $40 to $50 position for the payment each month. Eventually, I think AbbVie will increase the dividend enough that it could essentially buy me Google for life, which is the same goal. AbbVie has the same goal as Altria. So Altria buys Apple, AbbVie buys Google, and then eventually, hopefully, Visa will buy, Coca-Cola. So that's the goal, is this month buys next month. And then my income grows every single month, regardless of what the market does. So my dividend income is not based upon the prices of the stocks, and that's super important because regardless of fluctuation, as long as they pay their dividend, my income grows. So even if my stocks are down, my dividend income can still go up. But next up, we got Visa at $340. We are up $5 today. We have 35 shares, almost 11,900, but near 12K of market value in the position. Around $350 per shares. Our average cost, 21% of the portfolios in Visa. Today we're up $180. Total we're down near 270 with a 2.2% loss. So a small buying opportunity here, down about $7 per share. I'm not super worried about it though. But this will be one of the biggest, if not the biggest position. I do want Apple to be, my goal is to make it the highest position, but I wouldn't be shocked if Visa or Google even overtook that as the number one position. I will continuously add more cash to Apple to try to keep it that way, to keep it in that number one spot. But I'd be happy if Visa, overtook that position as well. Next up, we got Google at $167.43. Looks like people are a little bit less pessimistic today. We have 6 shares, a little over $1,000 in market value. So we're kind of growing out of the hole right now. It's good. We've been down for a while, but it's a buying opportunity that I want to take advantage of. Average cost is right around $193. 1.8% of the portfolio is in Google. Today we're up $30. Total we're down still about $155 with a 13% loss. So still a really good buying opportunity here for Google. And I think some of the bad press and people freaking out, I'm not worried about it long term. So I would prefer to buy more Visa just because I feel like that business model is a little bit better and a little bit more stable. But I do like to take advantage of, especially what I believe are high growth companies. When they're down like this, I want to take advantage. So I definitely would be buying Google here. And then anything below like 1,000, I'd buy Costco at. And then, I wanted it below 500, but I'd buy Berkshire Hathaway at this level too. So, with that being said, guys, I want to say thank you so much for watching. Remember to hit the like button on my channel, that dividend guy, and hit subscribe on my channel as well if you enjoy the content. I do apologize for not posting yesterday. My schedule has completely flipped. I've been doing, instead of 2 to 11, I've been working like 7 to 4. So it's just been a shift in hours, and it was a little hard to record a video yesterday. But I do plan on getting back on the horse as of today. So consistency is key. Every once in a while I'll have an off day, but I plan on staying as consistent as I can. So thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.